Hi, everyone. Everyone doing okay? Shahab, Kevin, Ren, everything's up. The one thing I did talk about that could happen this week, you guys could hear me okay, right?
Yeah, I can hear you, Coach. Good morning.
Thank you, buddy. Was we did have this stop hunt, finally took out these lows. 72 was the low. We've been to 63 without much follow through. One thing I wanted to point out with Euro making new highs, and there's a debate. It works for me sometimes, but not always. And I kind of interpret when Euro pound is going up, which for most of this, and in fact, this usually turns before the Euro. So this was turning up all the way back here. Euro was making new lows and EG wasn't. So the look on EG to me looks very vulnerable. And why can't we have something like this from here that would take it back under 87? So far this looks like a failing rally in EG. And Euro's making new highs, made a new high, about 2 or 3 new highs with Euro pound not having made a new high for a week. So um, I do give it some bias for directionality, and when euro pound is going down, it's usually constructive the dollar, and when it's going up, it's usually negative. Not always, and people have different opinions, and maybe I'm wrong about it, but I've been using it, especially when you don't get confirmations like EG not making a new high with euro, which happened late last week and yesterday. Okay, crude got to the level that Steve on his review has been talking about for a while. I think we got as high as 42.27. So a little bit of a potential candle here, giving this a shot for turnaround Tuesday trade. It took all this energy in the S&Ps, weeks and weeks of strength to finally get oil to make a new high for the move over 160. So 160 back under this previous high over here. If I can move this. Yeah, there. Okay. This was the high at 4160. It really is. Unless you've been just long metals, silver is just jaw dropping. I didn't expect this. Okay. This I thought could happen. And it's not only how what price it gets to, it's how it gets there. And most of the divergences are blown out in gold.
Uh, People have, good morning, coach.
Yeah, good morning, Steve.
People have to at least acknowledge that we warned several times that they shouldn't fall in the trap of shorting them just because they're diverging.
Yeah. So the team was very right. I mean, I don't think there were any bears. I was probably the only one looking for a top, but not until these highs were taken out, right? So I was looking for new highs in gold. It's not like I wasn't looking for new highs in gold. It's just that now that it's making new highs, unless we get turns quickly, and maybe it's going to have to do some. Well, gold is too bullish. Won't come back like SPX and oil. Okay, Gregorios is bullish aboard. Okay, so far so good for you. And let's see, was there anything else? So that probably means the dollar won't come back either. So we'll see what happens here with the dollar. Okay, yeah, when you're right, you never have enough on. And when you're wrong, you always have too much on, DJ. You ever notice that? Okay, so I can't chase this stuff, and S&Ps are blowing out, divergences, everything is. I think the news was out of China, some type of huge liquidity injection here, but you could see the RSI, and we're over. I tried it here at the 88.6. I was looking for 3260. I tried it, and I'm probably about 10 handles away from being stopped out. Okay. All right. And so the only fresh idea I have is this. I think it's worth a shot. This is one of the only ones that's not blowing out the RSI. And really, if you've been long crude, including you, Gregorios, it must have been frustrating the last month watching risk go up and crude do nothing. Okay. Well, I did it with a stop. So what's the worst case scenario? You could say that about everything. Okay. Congratulations. How do we get in your hedge fund? Okay. So we'll see what happens. Like everything, time will tell. And I think this is important to pay attention to. E.g., maybe you get a rally back to 90.60, 90.80, you take a shot with stops over the high of the move. So that's all I have to say. We could ask Kirk about his view in oil. Kirk Spanos can be with us at the top of the top of the hour. Bail me out, bro.
No, I'm going to let you flounder. Go ahead.
Okay.
Yeah, just keep flailing. Flail away. How's it going, man?
Fun flailing.
Fun flailing.
Humbled. Humbling morning.
Humbling. Why? In what respect?
Oh, just some of the things I was waiting for are happening, but it blew out a lot of my divergence work. So when that happens, you lose conviction about the trade. So it's not only the price; it's how it gets to the price. But it's come in with a couple of losers on the books when you wake up in the morning. That's all. It's happened a million times, right?
It's happened to me
every
multiple
day.
times. Yeah, it's just that hopefully not every day, but definitely I've gotten up and said, "Damn, I cannot believe that just happened." And but today was not one of those days. Today was one of those days where the dollar continued to weaken, which I've been expecting. So, but let's talk a little bit about that. And actually, before we go into anything, let's talk about gold. And I'm going to put this actually on the bias chart really quick because gold, you'd mentioned it, Dale, and I'm going to mention it. There's no reason for you guys to be short gold. I mean, it's ripping. Yes, there's some divergences out there, but I'll reiterate, in this environment, gold is making another leg higher. I was actually just talking to my brother-in-law last night. He's an engineer. He's a civil engineer. And we were talking about, he's like, if you had X, where would you put it? And I'm like, that's always a hard question because you're talking to somebody who is looking for places to put cash and is a little skeptical about the stock market. And I told him, I'm like, gold, think about what gold's doing and where it's going, and if you look at like the structure, and let me draw this for you really quick. Again, this is 2009.
11.
Well, 2009, 2011, right?
Yeah.
And you look at what we did. I mean, we basically rallied, broke out, came back down right to the breakout point, and are rallying again. So look at this is the breakout point right here. We did exactly what it should do technically, right? Exactly. And so now, we're starting an, possible, and in my opinion, be another leg higher, based on this massive amount of liquidity that's being added to the market. So if you just do that, you know, gold looks like it's probably going to the, above 2,000, 2,200 to 2,500 over time. It's not going to do it today, or, or anything like that. But I believe that gold's making another big leg higher. When you add liquidity, just to the market, like every central bank has, you're going to have traders and investors that are searching for, A, they're worried about inflation. B, worried that about buying things that just, you can't add liquidity to, which would be, gold and silver and hard assets. So I still think gold's going to continue to press higher. But next resistance that we've got for gold is going to be right here, 161% extension of the move lower from March, which comes in at 1830 or 1861. So let's just go ahead and write that down. That's our next resistance for gold, 1861. And support, let's redo this. I'm gonna go ahead and get started on the bias chart, guys. So just bear with me. So the support today will be 1820, 1818 on dips, 1818. All right, so let's go into these majors. So you're probably wondering, well, why is the euro struggling? Well, the euro is struggling because a lot of people were long going into this last week. So one of my colleagues and I were talking about this yesterday. We're like, a lot of people were getting long the euro. It's going to have to work off some of this. People are taking off volatility trades now because, when the euro just didn't, the EU, the European Union, and the agreement that they came up with is, let's see, let me get the specific numbers for you. 750 billion in the virus recovery fund, 390 billion of grants, and 360 billion of low interest loans. Those numbers came in a little lower than the market had anticipated. But the good news is, like I said, they're coming up with a fiscal union, if you will. And I think that's going to put a backstop on any downside that you see in the euro. So any significant downside for me is going to be, it's going to stop short below 114. So I think any dip now that you get even close around 114 is going to be bought. So, and the question is, are we even going to be able to get down there? Because what I think is happening is we're just working off, all this top side that the market had bought over the course of the last, week, and they have to work all that off. So I think support intraday 114.20. Below that is going to be 113.70. So I'm going to write that down. 113.70 major support and 114.20. Okay. Resistance today is going to be the 127% extension, which would be right here at 114.70, and then 114.70, and then obviously 115, which is key resistance. Let's go over to the cable. So the pound, pound's, in my opinion, bullish. We're above the 200-day moving average. When Coach was talking about the euro pound, I could actually see that really collapsing. Not necessarily today, but if the pound decides it wants to take off, which I think that the pound, it's interesting when you see, like, for example, like the cable round, look at gold is just flying right now. Gold and silver are just creaming higher. Silver is above 20. It's almost $21 right now. It's up 5% on the day. This is one of those things that's going to keep the dollar extremely weak, by the way. But the cable is clearing a lot of key resistance. This is one of those situations where the pound's probably getting above some pretty big resistance, and all of a sudden, out of the blue, whether it's this week or next week that, you know, there's going to be some real positive Brexit news, and then next thing you know, the cable just rips up like 500 pips, and you're like, whoa, how'd that happen? But you know, technically it is already happening ahead of time. So I like the cable as long as we stay above you know, this support right through here. You know, let's just say roughly 126.50. So 126.50 is support. Resistance 127.50, which is going to be the 88% retracement here. So 127.50, and you notice I don't necessarily I try to round the numbers a little bit because, as I have explained to you on multiple occasions, support and resistance is not an exact science. If it was an exact science, we'd all be so rich because, you know, you just go to an exact number and you look for reversals and that's it. But it's not that way. It's an approximation. So Aussie, bullish breakout in the Aussie. We are above 70.30, which is this previous high over here. Okay. So, and then the spike high over here was 70.60. We're above that right now. So now, in my opinion, any dip down to 70.30 will be bought. So 70.30 is going to be support. And where do we go in the Aussie? The 618. This is, and by the way, this 618, if you here, let me there we go. Okay. 618 retracement of the 2018 highs to the lows comes in at 71.23. So that is a big level resistance. And look, if you guys are like just non-believers, when I say non-believers, let's just say you think this stock market rally is a bunch of hogwash. Yeah, I said hogwash. It's a bunch of hogwash.
Hooey, bro.
It's pooey. It shouldn't be happening.
A translation for me? What does that mean?
Yeah. Well, those are like American slang, you know. Like
Hog is the pig, right? Am I
yeah,
right
it's a
on
pig.
that?
Yeah, it's
Yeah.
like it's an old like Midwestern, you know, saying. But anyway, it's like the market shouldn't be doing what it's doing, and you don't believe it. So if you believe that the stock market really shouldn't be rallying and it's going to reverse soon, look, if and you're in that camp, why don't you look to fade the Aussie at like 70, the 618? I mean, I love 618 retracements. My favorite. It's the golden fib. That's why I always have it miscolored or, you know, different color. Look, this would be a perfect setup in the event that it's going to turn around. Like let's just like, let me just draw it out for you. Like, let's say it hits the 618, stops and reverses completely, which could be the case. I mean, it could end up, you know, getting everybody stopped out who was short. And then it, you know, turns around and has a massive reversal. That could easily happen. Why don't you wait for the squeeze to stop? You know, like right now this is squeeze day. I'm short the Aussie and I'm getting my butt squeezed. Right, I'm getting my booty squeezed today. Let it squeeze up to the 618, and then, you know, fade it up there. See, and then maybe you get really lucky. Maybe the market goes tits up and, you know, and falls, and you happen to be short the Aussie at a great spot. Who knows? But I'm going to say that 618 is going to be fairly important, is what I'm trying to say. Okay, let's go over to the Kiwi. Kiwi's got a cup and handle pattern. It's bullish. It's a breakout. It's above 66 cents. The cup and handle pattern points to 67 cents. That's you take the distance of the cup, connect it from the handle to the top. So that takes us to 67 cents. I think that we will probably find some resistance between here and there, but let's figure out what that might be. High to low here 127% extension. Next resistance comes in at 66.28. Let's just say roughly 66.30. And I do believe that any dip now back to 65.90 should be supported. Oh, crap. I'm not doing this correctly. Hold on. Bullish. Bullish. Whoops. Bullish. Bullish. Okay. Dollar Canadian finally catching up. Dollar Canadian broke below the support, which came in at 135. So that is now resistance. 135. I actually still think the dollar Canadian's in a range. I know it might be bearish today, and I mean, we may slump back below 134 today, but I really think it's in a range. I mean, if you look at it, it's not. I mean, we once we filled, the gap down here, that came in at 134. We've been really just range bound ever since. I'm not bullish the dollar Canadian, but I'd be a little hesitant about being too bearish down here. I do think we can drop, especially today. Like I said, you got the Aussie squeezing, you got the Kiwi squeezing, you got the crude oil that's attacking $42. Chances are, the dollar Canadian is going to slip back towards this 134 level. So that's a 78% retracement, 134. Okay. I still think it's in a range. Dollar Swiss is also kind of range bound. Look at all the support down here. The support is at 93.62. So 93.60. 93.60, by the way, that's pretty important support. That's why I put an asterisk next to support or resistance levels that I feel that are pretty important. So big support down here. Resistance, if we start to squeeze, will be right back at 94.60. I am just not dealing with this currency at all. Dollar yen, another range bound currency. You can see it 107.50, 106.60, and you guys can have fun in that range because I'm not. 106.60, 107.50. Now the dollar index is vulnerable. And this is the thing that would prevent me from buying the dollar Canadian or buying the dollar yen. Is the dollar index is threatening pretty big breakdown. Okay, this is this trend line has been in existence since 2018. The longer term trend line since 2011. So my opinion is we're going to that 2011 trend line at least. So we're going from this 95.70 to probably 94. Once we get to 94, it's going to be it's going to be a little trickier. But we are, I'm going to write down today's lows as as support, because if it breaks through 95.60, we should see another leg lower. So 95.60, and resistance is at basically 96 now. So, and I'm going to say that that's bearish. Dollar MEX, big rejection yesterday. I'm such a wussy. I didn't pull the trigger. I was looking at it at 65, 22.65 yesterday, and I was like, man, I should be shorting this right now, and I didn't. Like a wuss, and like a chump. And we're right at support now, and so a break below 22. Well, I'm just going to write down this 22.16. And resistance is 22.70. I still think it's in a range, although I believe that, like the Canadian, we're probably going to break down a little bit. Eventually, these emerging market currencies are going to come back under pressure. For me, I'm actually waiting to play the dollar Mexican peso on the long side. I don't know where. I mean, I know if it breaks above 22.70 right here, I'm going to get bullish instantaneously. Like as soon as it breaks above that, I don't think that's happening today, and I don't think it's happening anytime in the near future. What I think is going to happen with the dollar Mexican peso, if I had to guess, we're going to do one of these, and then we're going to reverse, like, going next couple weeks. Probably when we fall off the fiscal cliff, August 1st, but that's just me talking out loud. US dollar, Norwegian krona. Let's do that really quick. It's bearish. We're heading to 9. If you look at this weekly chart, channel support, we'd been following this for forever, way before the shutdown. I mean, we were watching that way back here. So anyway, that channel support comes in at 9.
What do you think? Generational high?
I'm
not kidding. I'm serious.
Is that a generational high? It probably is. And even if we get, like, let's say we get some risk off and the dollar Norwegian krona squeezes, like, which I think it will at some point. I think like S&P is going to come right back down towards 2,500, and if that happens, the US dollar Norwegian krona is going to squeeze, but it's not going back to 12. I would think it might head back to 10 and a half, somewhere in this neighborhood, right? So yeah, is that a generational high? Probably. Anyway, sorry, I was just yawning. Let's resistance for the US dollar Norwegian krona. I mean, we're cracking through all the support already, so say resistance right now is 923. 923 is significant support. It's actually 901 if we want to get a little granular about this analysis. There, bearish, gold is bullish, and let's talk about the S&P, and then I'm going to pass it over to my colleague Steven. So, hey guys, do we have any data coming out?
Some Canadian data.
Yeah, we have retail sales from Canada and new housing price index.
Okay, 3240. Let me just write this down. 3240. S&P is bullish. Next resistance, 127% extension, comes in at 3316. 3316. And there you go. Your bias chart is done. So there you go, everybody. Steve, Stelios, how you guys doing today?
Good morning. All good.
So Stelios, you still bearish silver? Just kidding. Stelios has never been bearish silver, ever.
Why would he? He has common sense.
I tell you what, I had a couple of difficult weeks in March in the big crazy spike lower in everything, but I didn't get out of anything. So,
by difficult weeks, you mean you didn't buy more?
Well, I actually did buy a little bit, but I was scared shitless. Or can you say that? Yeah. Anyway, it was tough, but yeah, silver is breaking out, gold is breaking out. I don't see any reason why we should be bearish at this point. I must admit, I am slowly reducing my positions, but I'm going to keep a chunk just as a medium term or long term trade.
Really quick, Canadian data is coming out. Whoops, let me pull up data flash really quick. Okay. And by the way, you guys get data flash with your subscription to Forex Analytics. It's a great tool. It's just as, or maybe not just as fast as my Bloomberg, but it's not far off.
Okay.
Let's see.
There you go. There it goes.
Weaker.
The Chicago Fed came out quicker, but man, retail sales are about the same. Wow.
Yeah, it's a volatile number. Yeah, it's a volatile number, but it's slightly weaker. But I don't think the market.
Yeah, it's not going to move the needle a whole lot. Doesn't seem. All right. Well, guys, I am going to pass it over to the two of you. So there's your bias chart. You guys have a great trading session. I'll see the rest of you on the daily roundup in 4 hours. So for those of you that are Forex Analytics subscribers, I'll see you guys there live in 4 hours, and I'll kind of wrap things up for the day and get you ready for Asia. So, and if you're not a Forex Analytics subscriber, I'll see you guys tomorrow morning. So thanks, everybody.
Bye-bye, Blake.
Thank you, Blake. Thank you.
Bye, guys.
So, how you doing, guys? All good?
Good.
Excellent.
Coach, are you with us? Yeah, there you go.
Yeah. So the main event, just like Blake said, the European Summit Agreement, just under 400 billion in grants and 360 billion in loans, very, very cheap ones apparently. The Frugal Four had been battling quite a bit to get the number down, basically the grants number down, because really that's money to not be returned ever.
Yeah, because the others are going to be returned.
yeah, we're talking about in theory. And so that happened. And even though it was slightly disappointing in terms of size, just like we were saying yesterday and the day before in the webinar, the main thing is that the Europeans show some kind of solidarity and actually finally agreeing on something. And I said yesterday, what do I think the main goal of the European Union is? Well, to get bigger and stronger and more powerful. That's the goal. So you don't achieve that by not agreeing during very turbulent times like this one. So interestingly, the euro actually isn't doing anything. It was kind of priced in because we were saying yesterday we think this is almost a done deal. Obviously, nothing is a real done deal, otherwise it wouldn't be a market. But it was a very probable, and the markets kind of think or thought the same because the euro is not really moving today.
It's due to crosses flows, Stelio. I mean, mostly this has been received as a risk-on event. So I think one of the reasons why the euro is not really bid up, other than the what would be an obvious fact, which is the more money you print, the more money you loan, the more you go in debt. There is absolutely no way or reason you should see that as a currency positive. But of course, we live in times that things usually move opposite from economic sense. It's due to the fact that we're seeing all these commodity currencies getting bid. So I think this contributes in having currencies that are not so risk on related, like the euro, not doing much.
Yeah, true. So basically, we have risk on again, more money being poured into the system in aid, in all sorts of methods. So risk is rallying. My view, I've said it many times, I cannot be bullish stocks, but on the other hand, I cannot be bearish either. This thing is just a steamroller. So I'd rather be, I'm short Euro Norway still, which is doing very well. I'm still long silver, which is doing extremely well today and yesterday. So personally, my portfolio is still trading risk on, but I'm not touching equities. Obviously, I have missed quite a big move, but I'm fine with that. I have other ways to make profits when risk on happens, like silver and the Norwegian krona, just like I said. It's very difficult to be shorting this market, so I'm not touching it. But having said that, just like I said yesterday, I find it very hard to get long stocks up here, but I will not get in front of them either. So let's see what happens. With that. So what else did we have? We had the RBA meeting minutes from the previous meeting. They gave us nothing new. They just said that it's likely that monetary and fiscal measures will be required for some time. They are agreed to keep assessing.
Does eternity
eternity is good.
fall into the definition of some time.
Yeah, basically these minutes were as vague as you can have, because they said, we're going to assess the situation as it evolves and adjust as needed. Well, isn't that the job of the central bank? I don't get it, but that's what they're saying. They gave us nothing, and
they can adjust as needed, but only in one direction.
More of everything. Yeah.
Yes. It's either more or a lot more.
Yes. So apart from that, it's been pretty quiet. We're waiting today for the US, where Mnuchin will meet House Speaker Nancy Pelosi, and they're going to be discussing the next
her stock portfolio.
and the next aid package. And I think we said yesterday it's going to be somewhere between.
So I was kidding, but in essence, they will talk about her stock portfolio, from what you're telling me.
Of course they will.
Yeah, because the next aid package, in essence.
What do you mean? These guys have equity portfolios? Of course they don't. Or FX? No, they don't. And the target is somewhere between 1 and 4 or 3.5 trillion or something like that. It's probably going to be on the low side of that range, but still, it's going to be something considerable.
Cheap bastards.
Cheap bastards, yeah. So that's happening today, and we had the positive news on the vaccine trials from the Oxford side. Waiting on that still. Remember,
we've priced that in already 7 or 8 times.
Yeah, and we've had news about, oh yes, we're making progress in this and that. But remember, this is a long process to actually get it out to the people. You just don't, they.
Still, 2020 vaccine is the 2019 Chinese trade deal, really.
Which is a 2016 to 19 Brexit.
Yeah,
I know.
Yeah.
So, a bit of the same in every front. The main event obviously was the European Union. That was positive for sure. And we see what we have. Yes, today we have nothing else in terms of data. So we probably grind higher. I don't know. I really don't know. Other than that, I'm struggling to find anything else, really. That's pretty much it.
Okay, nice. So yes, today we at least have some nice moves to talk about. I have to tell you that personally, I'm a little bit worried that if these moves extend more, they might actually produce some kind of a reversal signal. I was, if we want to go into detail in the charts, for example, let's take the Aussie, right? I'm long the Aussie. I mean, I've even made a pattern play about it. I expected that this symmetrical triangle is going to break to the upside. But at the same time, I had also said in advance that I expect that likely this move out of it is going to be terminal. So, this is one thing to take into account. Second of all, let's take the explosive move in silver. Now, I'm not really surprised that we're getting an explosive move. It can be easily explained from a technical perspective. We had talked about this channel, this long-term descending channel. I said that once we break through that, we should probably see a squeeze. Yesterday was the first day that we actually managed to close above it. We had made 4 consecutive day-to-day attempts to close above it, but we never managed to close above it until yesterday. Sorry, the day before yesterday, and then the move the day after that we had a big move higher, and today we have even a much bigger move higher. I mean, we're at 5.5% higher. Having said that, we're currently testing the 127% extension of this this devious leg lower in silver, because in essence we got that move lower, which, if you remember, we have talked about that in the past. Same thing happened with gold, and same thing happened with the GDX. They, in essence, threw everybody that was bullish, or almost everybody that was bullish on those markets, they threw them out when they were in essence throwing away the baby with the bath tub water, when we had this sharp move lower. only to see a huge squeeze higher. The same thing happened with gold. The same thing happened with silver. Silver at a much larger extent, and the same thing happened with the GDX. We're also now approaching. We're very close to this ascending channel trendline resistance. So I have to tell you that I'm pretty sure that today's move, if it doesn't, calm down by the end of the day, I'm pretty sure it's going to attract a lot of attention. And we've now entered clearly like the last stage of, trading mania, which of course manifests mostly in stocks, because I'm not implying here, and I wouldn't be implying that silver or gold are bubbles. Actually, they are the only markets that, fundamentally speaking, make sense at the moment. I mean, what is surprising in monetary metals rallying when you have globally almost all central banks printing money like they're going out of fashion at a rate that it had never even been conceived before. So I do not believe that gold and silver are bubbles. I think they're still cheap, having to do with where they should be and where they will end up being. But I do think that moves like the one we're seeing today in silver might indicate some short-term high, that we might print some short-term high quite soon. And if that's the case, I expect that the same thing is going to happen with stocks, meaning they're going to probably print some type of a short-term high, get some type of a pullback, because I'm assuming that, even after yesterday, especially after yesterday's resolution, let's call it a resolution with the European deadlock, I'm pretty sure that now a lot of people are going to be feeling much more relaxed into diving in risk on trades and buying, such assets, which, very frequently these people are in the wrong side of the market, at least in the short term. So, the weak hands, the ones that jump, very late in trends, usually end up holding the bag temporarily. Usually they are the ones that capitulate first as well, because they have the worst type of entries. And then when the market shakes them out, it's much more free to keep moving in the prior direction. So I think the same thing might happen here with the precious metals. The same thing can happen with stocks. Now, speaking about silver specifically, needless to say that $19 from this point on should be considered a very, very strong area of support. I mean, it was a resistance for a long period of time. Now that we've, clearly sliced through it, it's going to be support. If you remember, I was also saying that I'm expecting that crude oil is going to make the same type of move, meaning we had quite an equivalent formation to the Aussie. In this case, the triangle was not a symmetrical triangle; it was an ascending triangle, but still, I mean, it was extremely shallow, so it was very easy to imagine that it was most likely a continuation formation and not a reversal formation. I mean, I would be much more likely to consider it a reversal formation if it was steep, but it was anything but. So, I'm not surprised that we're seeing the squeeze out of it. I actually expected that we're probably going to test. This is what I wrote in the end of week analysis as well, that we're probably going to test the 200 daily moving average, which passes from 42.50 roughly. And above that, because there is a chance that we're going to squeeze even higher from the 200 DMA, we have the 61.8% fib at 44.82. So roughly $45. And I do think that there is a very good likelihood that this move higher is also going to be, as I said about Aussie, is going to be a terminal move higher. Not longer term, but I mean, in the short term, it's going to be a terminal thrust higher. Probably we will need to see some kind of a reversal, get people that joined this trend very, very late, squeezed out. I would easily consider the possibility of retesting 29, as I have been saying. I know it looks to be far away, but keep in mind that crude has proved that it can really, really be volatile. So I don't think it's so much of a big deal seeing a move even from 45 down to 29 before we can continue higher. So the path of least resistance remains higher and the trend remains higher, but I would be very, very cautious to summarize because I do think that we're very late in this move. So personally, I didn't buy this move higher. For a short-term trade, I decided to buy Aussie instead. They had similar formations, and the reason I went for Aussie is because it's way less volatile. So even if I was wrong, it would be much easier for me to exit the trade, being relatively unscathed. So bottom line, my general thesis is this, that we're seeing moves at the moment manifest that are going to get people within the next few days very, very enthusiastic about the prospects of, higher prices in anything that relates to risk on. And I think they're going to be wrong, temporarily wrong. Let me add to that, right? The market will need to deflate a little bit before it can resume. Now, I commented a few days ago, and let's go to the 4-hour chart about it. I commented a few days ago, actually, I interrupted Blake when he was talking, commenting on the fact that this was likely head and shoulders formation in the USD CAD. I actually showed it on the daily. There it is. So here it is on the daily. Now, admittedly, and I said so back then, a lot of people don't like the idea of head and shoulders formation as continuation patterns, and I do get it. I mean, they are considered, theoretically speaking, reversal patterns and not continuation patterns. Of course, somebody could make the argument that we had an initial rebound from which we can reverse, but this is a large pattern to be a reversal pattern of such a small squeeze higher. In any case, if you want to look at it as a head and shoulders formation, yes, you can do so. And I was looking at that possibility. As I said, I'm not a lover of such formations being continuation formations, but I still pay attention to them. That would imply, which I do like as a possibility, that would imply a lower low, an incrementally lower low, which I do like as a possibility because I'm still of the opinion that this whole move lower is probably some type of a big correction. I'm still rather bullish the USD CAD. Anyhow, USD CAD is definitely the pair in which I would be more likely to be buying the dollar against something. I do think that the Canadian dollar is weaker and will remain weaker in comparison to many of its counterparts. So I do think that as long as we remain in this larger channel, we might see a squeeze higher at some point. And yes, we might actually end up doing that after posting a lower low. I mean, it is likely. I mean, if this is a head and shoulders formation and it wants to fulfill its target, that's what should happen here. Now, another interesting pair, if we're talking on the 4-hour chart, is CAD yen. So CAD yen is testing. We have this triangle I've been monitoring, and it's currently testing resistance. So, although it's not a very popular pair, I have to say that if you like it, the short side, this is where you short it. You can short it here with a very tight stop loss. I mean, I would assume something like 40 pips should be sufficient, hoping that it can pull back towards this triangle support. Because alternatively, if we close above that, I do think that we're going to squeeze higher. Now, let me see. Oh, yeah. One more thing before I go to questions. The cable. If you remember, I mentioned that, the cable was in a triangle. I said it yesterday. I said it's only the beginning of the week and we have like a big candlestick. I was actually showing the daily. That's why I went back to the daily. It's a big reaction from the triangle, I said, and my feeling strongly tells me that probably by the end of the week, I said yesterday, we should see a move above this triangle, likely attacking these long-term channels, trend line resistance. At the very least, I would assume that we would retest the 128.13 high. So we're now seeing this break higher. Here it is on the 4-hour chart. So, clearly breaking above this triangle. And here is because somebody, I noticed a question before, somebody asking about the pound yen and asking if it's currently testing resistance. I can tell you that, yesterday yesterday it also broke through an equivalent triangle, and I don't really see why it should stop here. I mean, I don't see why it should stop at the moment. I think it has the potential and the room to squeeze higher. 136.70 is the 61.8, but I do think we can actually make it higher than that before we actually reverse. Somebody's asking about euro yen, although it was the last question since we were on the yen part. We can visit that, and then I'm going to go through the questions from the beginning. So euro yen, appreciating through this, within this channel. I have to say that this move higher doesn't have impulsive characteristics. So I still believe that this move will eventually, and by eventually I mean probably sooner rather than later, fail for at least one more leg lower. So I would have to say that I'm not bullish the euro yen, not from what I see on the chart. Okay, I would more likely be looking lower than anything else. There is a question about euro Aussie and Aussie yen. I will address it, although it's the last one that came, not for any other reason, because I wanted to talk about euro Aussie and euro Kiwi myself anyhow. So euro Aussie and euro Kiwi, they're interesting for the following reason, because once again they failed. So false break higher, that's why you need to be very, very careful, right? I mean, I was very skeptical about the move higher in the euro Aussie. Because first of all, unless we saw, as I had explained, unless we saw some risk of move, this breakout could not really, resume. Second of all, because the price action was clearly one of a consolidation. So whenever you are in a downtrend and you have some type of consolidation, the chances are always higher that you're going to end up squeezing to the upside. Sorry, in the direction of the trend, which in this case is to the downside. Now, until proven otherwise, perhaps this channel was, it looked okay, but perhaps it's not even relevant. The more relevant shorter term formation is probably this one, right? In which case we're breaking lower, probably one more low here, exactly in the way I described what I expect to happen in the rest of the stuff. I mean, perhaps one more terminal push lower before we can get some type of a decent correction higher, which is going to come along with some temporary risk off or whatever. Here's the euro kiwi, more or less similar type of a deal. We're still above the previous low. That doesn't say much though. We never managed to produce a higher high. That is why it is important also keeping the basic rule of a trend, which is, I mean, breaking a trend line is fine and nice, but real confirmation that the trend is changing is at the very least seeing, in a downtrend a higher high, or in an uptrend seeing, a lower low. Only then you will have, much better indications that something is really changing. Let me go back to previous questions and address them, whatever we haven't addressed already. Euro Aussie, yep, we just addressed that. DJ says 2020 is generational in more ways than one. I couldn't agree more. USD SEC, is this pair close to support? Listen, I showed USD SEC perhaps even yesterday again. I'm showing it on occasion because I do consider it, sometimes it's actually leading what the dollar is doing. And I think I mentioned again yesterday that, listen, USD SEC clearly remains in a downtrend. For quite some time, it was riding this channels trend line resistance, but it never managed to slice through it, and it has actually now accelerated to the downside. So no, I can't really tell you that it's currently at support. I can tell you that there is an interesting confluence of supports roughly at 880. We're still some distance from that, but I would be looking probably for that being the next area of interest to the downside. 880, 883, that little area, because it's a 61.8% fib from this whole move higher. It's also the 141.4% extension of the last thrust to the upside there. That's why I'm talking about that level. USD NOK, I'm still holding my shorts here. I'm still holding my shorts in Euro NOK. I think it's doing nothing wrong so far. And, I commented a lot earlier. I mean, many weeks ago, I said that I think there is a very high probability that this is a generational high in USD NOK. So I will find any rebound as an opportunity to add to that, because I strongly believe that the Norwegian kroner is, a very good currency to be long term if you're looking for some fiat exposure. Of course, no fiat currency is a really good investment. Longer term, they all lose value. But if you want to look at one that is likely to a lot less value than the vast majority of them, I would say the Norwegian kroner is is one of the best. Pound yen here. Okay, we addressed that. Still, do you know one? Konstantinos Kotogoulas. Not sure if he saw the question. Can you give us your views on nickel as all car builders are pushing to go electric? Can you give me a ticker, please? We've talked about that before. I don't remember the ticker. Actually, next time I'm going to save the ticker here so we can revisit it. If you can give me a ticker, I'll gladly have a look at it. EuroCAD, PoundCAD, and EuroPound questions. Sure. EuroPound, actually, yeah, good that you mentioned it, because I wanted to address it in any case. So EuroPound. EuroPound failed this time before it actually made it to the previous high. Now, to be fair, I don't think it's a good idea shorting as we speak. Why? Because we're getting close to the confluence of the 50 daily moving average and this ascending channel trend line support. But I do believe that if we do break through this channel, which at some point we will, that's going to be a good indication that this corrective rebound is over, and we're going to see at least one more leg to the downside. So if you're looking for a pivot area, I think that this channel is it. So from a risk reward perspective, clearly from a risk reward perspective, if you want to do something with it as we speak, being long makes sense. But if we break through it, I do think that we're going to see this move extend to the downside. So depends on how you view it yourself. But you have the technical levels to watch for sure. Now, having to do with EuroCAD and PoundCAD, to be honest, I don't remember when was the last time I had a look at them, as it seems rather recently. I have to tell you that I had to redraw in EuroCAD multiple times what the hell is happening here, because I have no clue. I mean, from a technical perspective, it's a mess. So, the first advice I would give anybody by looking at this chart is find something else to trade, because I really have no idea what's happening here. I see nothing clean, nothing clear. Even if you look at the RSI has not hit an oversold or overbought reading for quite some time. So we can agree on one thing: there is no trend as we speak. So just look elsewhere. Honestly, I mean, I don't want to try to sell you some kind of expertise in reading something that I find myself unable to read at the moment. So trade something different. And here is pound CAD. Pound CAD seems more clean, at least at the moment. This looks like a symmetrical triangle. So in that context, just watch triangles resistance, triangle support, and hopefully when we break out, this is not a false type of breakout, and we do see continuation. So between the two of them, first of all, both of them are sending the same type of signal, which is that they currently have no trend. That's a given. But at least between the two of them, it looks more likely that there's going to be some type of a signal to do something with pound CAD than with anything else. Coach, I think we're exactly at the top of the hour, so that was a good timing to finish addressing the questions. I know that we have Kirk with us, and I'm really looking forward to what he has to say.
Okay, thank you, Steve.
Thank you.
Welcome back, Kirk. Good morning, buddy. How are you?
I'm good. Can you hear me?
Loud and clear.
Yeah.
All right. I'm trying to share my screen.
You can do so now. I just finished sharing mine.
Okay.
What's on the radar, bro?
Well, I wanted to give you an explanation of hogwash, seeing as I'm in the Midwest near Iowa and Wisconsin.
Yeah.
So hogwash is the garbage and just the junk that you throw to pigs to get it to eat. So pigs will eat almost anything. So for all those people in the audience who have seen the movie Snatch, there is a very famous pig scene where they're trying to get rid of the bodies. And this guy comes in, and you can tell by his face that he's a little maniacal. He says, throw them to the pigs. The pigs will eat anything. Wow. And I think that's a good analogy for today's stock market because
the pigs eat everything. Yeah.
Oh, yeah. And the narratives, right? The hogwash that's out there, I think is off the charts. It reminds me very much of 1999 and 2006. So
Kirk, the only thing that was missing from calling this market a bubble pre-COVID was the rather low participation from the retail side in the rally. Right. I think that they've now managed to add that to the mix.
I agree. Back in one of our early interviews this year in January, I talked about, and this is the one that we did in January, and I've highlighted the word correction. And I would encourage people to go take a look at this transcript that we talked about. And what I suggested is that early in the year, there'd be a volatility event. Clearly, at the time, we didn't know it would be COVID. But the market was overvalued, and a volatility event we knew would stimulate the Fed, and that would draw people in because we knew, and we knew that people respond to the Federal Reserve printing money. So we talked about all that right here months before it happened. Then we had COVID. And back in January, before it was on the radar, I talked about COVID being the most important story in the world. And people were like, huh, what are you talking about? So eventually, ahead of the big correction, we talked about the big correction with my subscribers. I'm just going to get rid of these as we go through. That's my website, Fundamental Trends. And I just want to consider all these things in the context of the 2020s in general. We know that sustainability and smart asset allocation and really having a simple rules-based approach is probably the smart thing. And we want to invest in disruptors and divest the disrupted. And this is an idea that came straight from Druckenmiller, who hard to question anything the guy says, right? So in the broad context of investing in the 2020s, COVID changed the landscape and really accelerated and amplified a lot of things that we thought were going to happen already. So when I was at the Consumer Electronics Show in January, a lot of things started to make sense to me about how the 2020s were going to go. And I was looking at it over a time frame of 7, 8, 9, 10 years of how things would happen. And then COVID hit. And now we're looking at a time frame of 2, 3, 4 years that everything's going to happen. It's all going to happen faster. It's going to happen bigger. If you were listening to Joe Biden the other day, who I predicted a year ago would win by 10 million votes, and I made money betting on Bovada on that, got 6-1 odds, when everybody said that Biden didn't have a chance back in January. His stimulus plan is going to be a $2 trillion Green New Deal. That's what he's talking about. So if he ends up winning and getting Congress, this whole idea of sustainability is going to be a big deal. How does that play into everything else? Well, just to go back a little bit here, because of the Fed printing all that money, I had talked about a massive gold market before the Fed intervened. And then here on this show, I bought GDX on air at $17 a share. And what is it now? 40, 38? So some of the things that we've talked about on this show have been spectacularly right. So I'm going to talk about a couple things today that I think you're already talking about at the top of the hour usually. I want to talk about the dollar. This is an article that I wrote back in 2012 when everybody thought that the dollar was doomed. And I gave 8 reasons on MarketWatch why the dollar was going to be the reserve currency for 40 more years. Generations. We're going to have generations of the dollar being the reserve currency because there really are no other alternatives. And the euro is so impaired that one of my predictions...
Kirk, sorry to interrupt. What about the alternative of just going back to something like to the or something like the gold standard? That's always an alternative.
It's not an alternative.
Remember the basic, one of the reasons, the main reason that the dollar became the world's reserve currency was because the US said, okay, now that we have 85% of the gold reserves of the planet, why don't we just, make the dollar the world reserve currency, and it's going to be redeemable in gold. And that's how people, countries went into the deal and said, yeah, okay, it makes sense.
The reason why we will never, ever, ever in a billion years go back to the gold standard is because there wouldn't be enough gold to redeem all the currency that we've printed. So, this idea, and I understand the Austrian arguments. I went to school for this. I've studied it for 30 years. And I don't want to get on a big, long diatribe, but the interest of the United States is not to have a gold standard. Therefore, we won't have a gold standard. It's really that simple. There is no fighting. And I know that everybody wants to because, let's support the little guy. Let's have a theory about this or a theory about that. But the reality is that the United States is so strong. We have such a gift of geography. We're safe. We're diversified. Unless we have a civil war, the United States is going to be the strongest country on the planet for a very, very, very long time. And the only real competitors are Europe, and they can't support each other. The bill that they just did is a Band-Aid, and the market will represent that soon. And Russia, and China, they have some of the things it would take to be real leaders in the world if they would show some real leadership, and they can't do it. And it'll take generations for Russia and China to right their ship. And I predicted a decade ago that the euro would eventually explode, even though it's the best thing for them. The best thing for Europe is to be tighter together and have the euro be a competitor to the dollar, because eventually scarcity comes back because of the investment cycle. And and we're at the cusp of that, which is behind the two investment ideas that I have here in a second. But back in 2014, I predicted that the euro would go to parity. I was buying puts on FXE, and also I dabbled in the futures market back then and made a whole bunch of money on the initial decline in the euro. The euro has stabilized, tried to show some strength. It didn't. Ultimately, the euro is going to go to parity with the dollar, plus or minus. So the rally in the euro, while it could get up $1.20 maybe, I think that it's more likely to turn over here in the next bit of volatility, which I see in the next 2 or 3 months, very similar to your guest yesterday, Mr. Newton. So you see the euro is going to turn over probably in here somewhere, and then it'll end up over there in here. And I will trust you guys with the short-term movements, the day-to-day and week-to-week stuff, because I'm looking at weekly charts, right? So my weekly charts are way different than your hourly and 4-hour and even daily charts. But the euro, just because of all the inherent tribalism in Europe, they are never going to do what they need to do to make the euro the strong currency that it really truly should be, until they have an even greater crisis. When they get to the point that they have inflation, where the United States is exporting inflation to them, somewhere in this yellow box, they will start trying to figure out, okay, do we break the euro up? And that could happen because of all the parochialism there. Or they could say, you know what? Let's tie ourselves together a little bit more. Let's take these frugal four, who are really hypocrites, and figure out what to do about the euro to make sure that we don't have inflation in an era where scarcity could come back. One of the things I would point out with the frugal four is Norway. You take a look at Norway, right? Somebody can turn off their mic, but Norway made all their money.
I'm trying to see who it is, but
in oil.
We all seem to be muted. I don't know where it's coming from.
Okay, well, someone's got a television on. In any case, Norway made all their money in oil. So I would take with a grain of salt anything that Norway says about maintaining the budget, or the Norwegians, or anybody over there. In any case, the dollar will stay strong. It'll be range bound. It'll be tradable. But the currency that I like, which you guys talked about this morning, I don't remember who was talking about it. I really like the Aussie. So going back into the framework of everything that we talked about, of how the 2020s are going to shake out. Oops. You take a look at the Aussie. So as the world decouples from China, who stands to benefit? And I think it is clearly the Australians, who are going to benefit from the United States not being as involved with China as we have been. So Australia will become even more of a supplier to China. And consider this wild card. I think it's very likely that the United States, just like they have in the past with oil, I think the United States is going to ban the export of coal. And I think it's going to happen next year or the year after.
Why?
So if we ban the export of coal, what does that do? Right? That is a major change to the economic landscape of the whole planet. It'll be done in the name of climate change. I'm not arguing right or wrong. I think it's right, but I'm not going to argue it. And that means that Australia makes a ton of money selling coal to China in the short term. So while we have had oil economies that have extremely strong currencies, consider that China is going to get a lot of food, right? They're already taking parts of the outback and irrigating it to make it into farms for the Chinese. But they're also going to get a lot of their copper and a lot of their coal from Australia. So I think that this has been an amazing opportunity to buy into Australian currency. If we get a little bit of a correction here in the next month or two, I should move that over a little bit. You'll see the Aussie dip. I've targeted this area here, which is the same area that you guys have targeted. I think that you have to buy the Aussie on the dips. Now, depending on how bad things get, I mean, it could go all the way down, close to the low again. I don't think that's extremely likely. This level here, about 63 cents, right? About 63 is probably about as low as I expect it to go. But even up here, right, 66, 67, right? It doesn't have to go down much to be a buy. There's also, if the dollar keeps weakening, right, it could jump up. But I do think the dollar has a little bit of strength left in it this year. If you take a look at what the dollar did under the Obama administration, we're in for more of that. I know that people don't like to hear it, but Biden's going to be the next president. And he's going to win by somewhere in the range of 8 to 12 million votes. So it's not going to be even terribly close. And what's going to matter is not just that he's the president, is that the down ticket, if you've been watching all the swing state senator votes, the Democrats are killing everybody. Mitch McConnell is like 7 points behind. So you should start thinking about, if you're objective, you want to argue politics with me, fine. But if you're being objective, if you're looking at the data, and I get data from several hedge funds that do private polling, and I was tipped off to this by Druckenmiller last year in an interview he gave with the New York Economics Club. He said last year around April, May, that he was doing private polling data, and he said that Trump was going to lose last year. I just, I'm kind of a city guy, and I'll tell you what, at the risk of using the word black, I've got a lot of black friends. That's where I grew up. I'm telling you, the black vote's coming out, and Trump doesn't stand a chance. So if you really, truly are trying to figure out which way some of these curves are going to break, keep that in the back of your mind, that you ought to be preparing not only for a Biden presidency, but for a Democratic-controlled Congress. And the Aussie, I think, makes a ton of money on the decoupling of the United States from China.
Any chance that the election doesn't come off because of COVID and social unrest and Trump being behind in the polls to try and postpone the inevitable?
So I will tell you this. If I heard, I don't know if it was yesterday or day before you guys, it must have been yesterday you guys talked about that. Somebody mentioned it. Did Mark mention that? I think that if he tries to postpone the elections, you will see a massive assault on the White House. I think you will see millions of people go to the White House, and they will run over the police and the military, and they will take Trump out of there. That's what I think will happen. So if he tries to do that, he's in trouble.
I also have a question. First of all, I don't disagree with you. I mean, I have been saying since last year that, if the economy for any reason went bad, Trump wouldn't stand obviously much of a chance. And, since then we've had, evidence that, the chances are even smaller. Of course, nothing is impossible, but yes, I mean, theoretically speaking, Biden is a very high likelihood for being the next president. The question, though, is, what do you think? How do you think this is going to affect, first, the economy? Second of all, the stock market, given the fact that if one thing is a given among all Democrats is that they've clearly stated that they want to increase corporate taxes by a lot, and that should definitely affect earnings, right?
Yes, and I have, at the start of the year, I talked about this. I expect after Labor Day, probably maybe sooner. I expect the second half of 2020 to be a lot like the second half of 2018, and we actually talked about that in that first the one that I X'd out, that webinar in January where we talked. Everything the market's done has pretty much gone to script except more, right? It's been amplified. And I think that the stock market gets a correction here soon, month, 2-3 months out. But I think that there's a possibility, because a lot of Democratic money is sitting on their checkbooks right now. They're not investing in the stock market. If you go over to Sentiment Trader, if you use that, there's a smart money, dumb money index. And you alluded to it earlier. The retail side, the dumb money, is piling into the stock market. But the smart money, a big hunk of the smart money, is sitting on the sidelines. People like Warren Buffett. And I think that, if you want conspiracy theory, I think that you can start to think about, okay, is any of this Democratic big money going to come in the stocks before the election? I think the answer is no. I don't think they invest until the election is in the bag, because I'm of the opinion, and I know, and I hang out in these circles. I'm of the opinion, and I think a lot of those people are of the opinion, that if Trump would win, we'd probably be in a depression for a while. So we probably see.
Why? What's their reason?
Because the wealth inequality is a real issue. And there just isn't enough money out there to float the stock market and the economy running $1 trillion and $2 trillion a year deficits. That would be the one thing that crushes the dollar and causes stagflation. I mean, if you want the recipe for stagflation, look at what is going on with all the economic numbers. I've had this up in other reports. All the economic numbers started to turn over in 2018, right? We got the sugar high from the tax cuts, and
then it started waning. Yeah,
and everything started to fall off. So I predicted before COVID that we were gonna have a rough year, and then COVID just made it worse.
Okay, so a depression under Trump, and what do we have? Stable economic growth under Joe Biden?
I think that we see very similar to what we saw under Obama, under Biden, except I think that it's very likely that Biden governs from the left. I think he runs as a centrist, but I think he governs from the left. And when I say he governs,
so Biden's Roosevelt.
And I think he's a lot more Green New Deal than people give him credit for. What he talked about the other day, the deal that he signed with the Sanders people to keep them on board, is significant. And if they have a blue wave, then you better get out of the old economy stuff. And I talked about that 2 years ago, that people have got to get out of the old economy stuff, because your smokestack industries, anything that can be automated, oil, you have big problems in all of those markets anyway on the secular side. So rather than those industries drifting away, they're going to get blasted away. And when you see the investment that comes in on the sustainability side, when you see alternative energy, when you see rulings from the Supreme Court on a FERC rule, right? The FERC has a rule about batteries, and the utilities for fighting it. So now you're going to have a decentralized generation system in this country. That's bad for the utilities. The fact that the utilities are rallying lately, it's a stupid rally, because this ruling it was a headline, and nobody pays attention because, alternative energy is decades away. Baloney. Alternative energy is the fastest growing thing out there right now.
Well, Mark thinks the utility rally might be a little bit of people starting to hedge their bets that this rally might be growing long in the tooth. So utilities are people getting defensive.
Yes, I agree. That's part of the whole rotation, but it's wrong. That doesn't mean that it's not happening, but it's wrong. The utilities have major structural problems because they're going to lose their monopoly on generation. And they're going to have to figure out how to pay their debts and make money as transmission sources, right? They're not going to even replace a lot of the coal-fired power plants that are closing because commercial industry, and this is where you're going to get your bump on earnings. Places like Costco or Kroger or Kohl's or Walmart, companies that hang in there and they make their properties energy generation, right? Because they'll slap solar panels on the roof. You can see those projects all over the country. Now, with this FERC ruling, the utilities have to grant them access to the wholesale power market. They can charge a fee for the connection, but these big box stores, some of the companies that have the ability to generate their own energy because of where they're located, the shape of their building, things like that, they're going to make a lot of money. So one of the things
selling back the power to utilities
and producing their own power, right?
Right, that saves them money, and then okay.
Right, so they save money producing their own energy, and then they have an excess because they have a battery system.
Right.
The law is going to require that they're able to be plugged into the grid. Microgrids are becoming a big deal, right? So if you have an industrial park that's a mile away from from a bedroom neighborhood and a residential neighborhood, that residential neighborhood is going to get a lot of their energy from the industrial park on a microgrid that probably the utility has to maintain. So you have to consider which companies are going to fit in with this new economy, this smart everything world, alternative energy world. Who's going to fit in best there? And that's where the huge opportunities will be. And Biden will support all of them. And then on the other side, you're going to have the companies that don't fit in, and they're going to have a problem.
Kirk, just something that you mentioned that conflicts a little bit, or perhaps I haven't understood it correctly. You said, and we agree 100.0%, that the US cannot keep running these type of deficits because that's going to inevitably lead to stagflation. No disagreement whatsoever. But my next question is, how is it possible with Biden being the president, and you said it, and I agree 100%, that he is heavily influenced by the, as they call themselves, democratic socialists of the party. How is it possible that a government mix like that will not run even higher deficits when, just by looking back, we know that irrespective of Republican or Democrats in the government, deficits are just going higher every 4 years, no matter what?
So under Obama and under Clinton, the federal deficit as a percentage of GDP decreased. Under both
as
of
a percentage of GDP.
Yeah, under both of them, right? So you should expect the same thing. Now, I've also suggested to my subscribers, and I'll mention it here. The Fed balance sheet is basically bailing out the corporations, correct?
Yes.
At some point, the Fed's going to have to be bailed out. Well, I was looking at all these charts last night, and it struck me we're a lot closer to another financial crisis than I thought. I thought it wouldn't be till the 2030s. I think it's probably late this decade. 7, 8, 9, 10 years from now, we've got some major debt issues. And you have to consider that the Fed's balance sheet is basically leveraged out for 5 years, correct? They basically took on debt that was up to 5 years. And I believe that at some point, because this is all corporate debt, most of it's corporate debt, you're going to see the federal government allow all of these corporations to convert that debt into equity. So the question becomes, where does that equity go? Does that equity stay on the Fed balance sheet and they sell it off and the money goes back into the Treasury? That's one solution. The other solution to keep the stock market from crashing is to take that equity and seed a Social Security trust fund with it. So I think that given that we know that Social Security is going to be in 30% deficit a decade from now when all the baby boomers are retired, one of the smart things that we could do, and I've always argued that when things make sense, they eventually happen no matter the opposition, right? Kind of the Gandhi approach. Eventually, I think it will make sense that a portion of Social Security has money going into the stock market. Why is that important? Because it solves a lot of problems all at once. One, you do a helicopter money drop to seed everything. And I think we literally have to print an economy. I think we need to print around $20 trillion sometime in the next decade. And I don't mean creating treasury debt. I mean just printing the money. But then you ask the question, doesn't that create hyperinflation? No, if you do the right thing with it. If you use that money to actually solve problems, and then you only trickle it in slowly over 30 or 40 years through Social Security and all the pensions that are underfunded. You know, if you want to pay for a couple pet projects along the way, I get it. But if we print $20 trillion, we bail out the entire retirement system. We bail out the Federal Reserve. We put equity into the Social Security system. We write a law that says 20% of your payroll deduct goes into stocks. And then all of a sudden, the stock market is strong for another however many decades. And we've seen a similar system down in South America. I forget which country does it. So a lot of things that make sense will happen along the way. People will have to set ideology aside. And with the demographics of America, it is clear that we're going to take a half a step to the left. And a lot of these ideas are half a step to the left. So will corporations be as profitable? Yes, I think so, but not all of them. There is a huge bifurcation coming in the economy. And if you try to stand on the side of old smokestack industry, of stupid production models, of importing cheap labor from China, right? Of producing overseas to get a labor advantage, you're just on the wrong side of the equation, because machine automation, right? Machine learning was already changing how supply chains worked. Yeah, Trump came in there, did the tariffs, had the trade war, whatever. It didn't really change the fact that everything that he was talking about was going to happen anyway. We were already going to have less reliance on China because supply chains demand that a robot, because it's cheap in both places, demands that you have production near the consumer or the raw material, right? It doesn't make sense to take a raw material from South America or the United States, send it to China to be produced, and then ship it back or ship it somewhere else. It makes sense to do the production near the end consumer or near the resources, in which case America's good for a lot of that. And again, that's why I say, I take the Buffett approach on America. You are a fool if you are not investing in America, because everything's going our way forever. I mean, unless the world ends, this is the best place to be in the world for economic opportunity. I don't care. Maybe there's some small little countries, but the reality is that our economy will be the leader again. It'll continue to be the leader. A lot of the things that we've done since the 70s were designed to keep the peace, because we knew, right? We knew that making sure that people had a pot with a chicken in it would keep them from being angry. So even though we're going to pull some production from China, and Japan is already doing it, and that's to protect the supply chains from the communists, the reality is that we still are going to have a lot of companies producing things over in China, but it's going to be for the Chinese. The whole import-export infrastructure is going to change. You want an industry that's going to get crushed? Take a look at shipping. Shipping's going to get crushed again. This rebound is silly. So as the world changes, as it always does, you have to take a look into the future, try to be a futurist and say, okay, what makes sense? How's it going to get there? And some of the things out there, I'm looking at weekly and monthly charts. So you guys are going to look at this differently. But I tell you what, I should have been investing in Australia down here. I have to buy the pullback. I don't know if it's going to get down to me. I might have to move my lines up a little bit.
Okay.
We'll see. Australia is going to do really well because the United States is probably going to change our policy towards China. And we know that the Australian government will take advantage of that. And that's fine. They're our ally. They love us. We love them. We'll let them make that money on China because it makes sense politically to tell China, hey, we have to take a little harder line with you.
Okay, Kirk. So the best way for people to follow your commentary and, your ideas and your website.
Fundamentaltrends.com is my website. But I'm also on Seeking Alpha, and I write a lot of public stuff there.
Okay.
And I actually, we don't have time, but I talked about oil, and I will just give you the takeaway here on oil. It's going to be range bound and choppy for a really long time. I don't see a big breakout in oil. I don't see a big breakdown in oil. I think it's going to be choppy here because if it goes above about $55 a barrel,
yep,
then the frackers kick it back in. And if it goes down here, nobody in the Middle East makes money and Russia doesn't make money. So they're going to do their best to keep it in this area. Could it get up to the lower 60s? It could. But then all of our oil companies, who will soon be owned by private equity and Warren Buffett and Carl Icahn, then they start kicking it in. So as the price of oil goes up, we get more fracking is basically the bottom line. Although it's still going to be tighter. I'm undecided about if the top of this range is middle 50s or middle 60s. I'm not really sure. Middle 60s makes a lot of sense for a lot of people, I guess. But we do know that the automobile industry is going heavy into EVs in the second half of the 2020s. So that'll suppress demand. So I think that you can trade. If you're a good day trader, you can trade the heck out of oil in here for the next 5 years, 6 years, 7 years.
Okay, range bound. And you're most bullish Aussie because of their relationship with China and their ability to sell raw materials to them. Correct?
Right. The decoupling of the United States from China is going to be very positive for Australia.
Got you, buddy. Well, I want to thank you for coming in and giving us an updated view of the things that you think of. And good to know that the U.S. Is going to survive everything it's going through with your forecast. So thanks for some optimism in some difficult times here in America. Appreciate it.
Yeah, well, we'll have a vaccine eventually.
Okay, Kirk. Thank you, my trading warrior brother, everyone. That's Kirk Spano, and you could follow him on Twitter at Kirk Spano, and his website and Seeking Alpha. Kirk is sought after for his ideas. Thanks for sharing all those ideas for over 30 minutes today, buddy.
Take care. Sorry to be long-winded.
Oh, that's fine. Thank you so much, man.
Take care.
All right, everyone, that's a wrap. Remember, don't just count your pips, count your blessings, and we'll see you tomorrow. Good luck, everyone, for the rest of the day. Tomorrow I have Meb Faber. I believe he has a very large following. We'll see. It's going to be his first time here in face.
That's an amazing interview you get to do.
Oh, you know him?
Okay. I've talked to him indirectly. He doesn't know me, but I follow him. I actually have started to build my ETF model portfolios largely on a lot of the things that he's talked about the last decade.
Wow. Okay. Thank you, Twitter. That's all I could say. I invite and some of them come. Build it and they will come. Thank you, buddy.
Take care.
See you, Kirk. See you, everyone. See you, warriors.